LIN has gotten a lot weaker. There was a low here that was due 9.9 to right around 11.25, a very weak rally, only a 1 bar rally, and then look at the angle of the RS on the weekly firm down. So what that says is the overall bias is down. There is a mid-cycle low due somewhere around earnings, likely around the middle part of February, and the dominant troughs only due out in June. So still a bearish mode and seems poised for a test of that low at 396 in time. But if we hop over to the short term, there is a short-term trough due 12:30 to right around 114. Just as usual, watch the angle of the RS on the daily. You want to see it curl its way back on the upside for this to be likely form that trough and then hold positive. You will likely see a little bit of a move like that as some sellers come in around the 21 EMA at 425.67. If it can put in a higher low, that would set up a pop back to the upside towards at 430 to 436, and then 61.8 up at 442. We'll have to see what it does, but you'll be wanting to see a series of, again, if-thens, right? Put structure around the thinking, not just that there is a low due and that we have to rally. No, that is not the right thinking. Use the angle of the RS, watch for it to turn positive. If it turns positive and you can see a higher low form, this would be a counter trend swing long opportunity, which means, again, smaller size, correct? Because the trends are down still on the daily from a short-term perspective versus that low, right? You can see that setup showing up if it wanted to. In terms of a different way to set it up, if you look at the RS turning green here, when it goes green, you have to see where price is. I would be looking at a stop versus that swing low. So it would need to make sense in terms of what is my risk versus what is my upside. You have to watch, but that's another way to do it. Wait for this to turn green, see where price is. My personal stop would be versus that low because it's an obvious level that would tell me that I'm wrong. And then I need to see what levels can I be targeting on the upside. And then based on that, what is my average risk going to be on this trade versus what can I make potentially on the upside in terms of my levels. Now, one other thing to also keep in mind, right? What's going on with the market right now? We are seeing breadth, obviously quite low on a relative basis in terms of number of members in the S&P over there. 50 days down at around 25%. That's a short-term extreme level. So do we see a bit of a pop back to the upside in a lot of these names? That seems to be an opportunity that I've actually voiced to our level 3 and 4 members on Discord. That's something that I'm looking at. But we haven't seen confirmed shifts in the indicators to tell me that this is in play. But that does appear to be like an opportunity. So this is us looking at what's going on in the overall market environment, right? And then trying to understand, based on that, where are these opportunities going to show themselves, right? And we're still using our same core pillars of our process: swing high, swing low, our trend indicators, and of course the cycle analysis to understand timing. All right, so that's a look there at Linde.